Welcome, I'm Catherine Magana here with Rachel Ivanovich, Greg Carroll, and Vince Stefano, fresh from Puerto Vallarta, so welcome back, Vince.
Always nice to be back at the table.
There we go. We're here to provide insights on the markets, taxes, and planning. So to give you an update from last week to this week, the markets, or some of the markets in particular, are up from last week. The Dow Jones from last week to this week is up about 1%. However, we are still down for the year, but slightly. As of yesterday's close, and yesterday would have been March 26th, the Dow Jones was down about 0.21%, so pretty flat for the year. The NASDAQ, which has had the most movement, is more the tech stocks. As of over the last week, that sector is up a little bit. However, year to date, it's down about a little over 7%. And the S&P 500 is up a little bit from last week, but it is down year to date about 2.88% as of yesterday's close, March 26th. So we are seeing, from last week to this week, we saw a little bit of positive movement, but the markets are still volatile. Some clients are still nervous, and there's a lot of uncertainty still out there. We're hearing the tariffs. We actually had a conversation this morning with a client that they're paying or helping with some of the parent student loans, and they're worried about that. And then Social Security has been a hot topic. So we're not Pollyanna saying everything's wonderful. There's definitely still a lot of noise out there, but we are, the markets in general, investing wise, I don't think they're as bad as as we hear or we think. But anytime we see a downturn or a correction or any down in the markets, I think it hits home.
Yeah, it was interesting. I was reading something this morning about those student loans, and I kind of had forgotten that they gave them.
They deferred the payments during COVID.
Mm-hmm. Yeah, until like the end of last year, right?
Yes, and all of a sudden.
And now they're supposed to start ramping it up, and the delinquencies that had been nil are going to start rising. So that's going to be another headwind.
It's a hot topic.
And with the tariffs next week on
Well,
April
people are
2nd,
nervous about taxes.
tax time.
It is tax time, and so I'll just jump in. It's tax time.
It's tax time. I know.
We're in the trenches. I've got 20 more days. No,
Who's counting, right?
I am
How many
definitely.
hours?
I almost have it down to the hours. So if you turn 73 in 2024, you still have time to take your first required minimum distribution by April 1st, which is Tuesday. But keep in mind, if you didn't take your RMD or your required minimum distribution this last year, you will have to take 2 in 2025. So that's something that we're talking with clients about right now. And then, of course, people are scrambling to get their tax docs in because remember, it is an extension of time to file, not a time to pay. So your tax bill is due on April 15th this year. And I would say every year, but the last 5 years, there have been kind of this moving target for when the taxes are due.
So if you're on extension, you still owe.
You still owe the money, yes.
Got to send that check in.
Yeah, you have to send the check in. And not only that, but if you have a lot of investment income and or if you have capital gains, et cetera, or and you don't have any withholding, you want to make sure that your first quarter estimated payment gets paid by April 15th as well. And that's all I've got about taxes.
Yeah, no big storms, I guess, this year. So
No.
we do have to.
I'm always looking for a big storm so I don't have to pay anything until November. I'm going to jump in and talk a little bit about the markets, and we have over the last 4 to 5 weeks in this podcast. Large cap tech has been out, more conservative dividend stocks have been in. Not certain how long this rotation is going to last, because I'm not sure if this is just a parking spot for a lot of investors. So I'm telling people out there, tread cautiously before you jump all into conservative dividend-paying stocks. A lot of this tech sell-off has been because there has been a growth scare. And if you think about it, the first week of February of this year, the S&P kind of hit an all-time high. And at the same time it did that, during that week, America's largest retailer, based in Bentonville, Arkansas, who we all know who that is, came out and said they were very nervous and cautious going forward. Well, since then, that retailer and the S&P have sold off more than 10%. So as a result of that, many technicians have now said, hey, we may have started to reach a bottom in the S&P. And we can look forward to possibly a rally from now where the S&P is at 5688 going to 6,000 or 6,200. And when you think about that, you have to remember that 21% of the S&P 500 technology stocks. So to get to that number, tech has to rally. And I believe that over the next month or two, we're going to make up all of the lost ground we've seen in technology. Another point I want to touch on is, you had mentioned it, Catherine, earlier in your opening. One of the investors' least favorite words is recession. You know, it's like Harry Potter and Voldemort. You know, it's
he who must not be named.
He who must not be named. But it's interesting. Over the last 3 weeks, there has been a threefold increase in the press mentioning the word recession. And Google searches over that same time frame are at a multi-year high regarding recession. Economists that were, I guess, asked at the beginning of the year, what do you think? 23%, 2025, you'd see a recession. This was January of this year. March, 43% have said we're going into a recession. Interesting, when you listen to corporate earnings calls, no company has said we are going into a recession. So there's kind of a dichotomy there. There is a growth scare continuing, uncertainty regarding tariffs, but I believe once that script flips to tax cuts and the elimination of burdensome business regulations, you're going to see a reacceleration in the market. Now, there is one, and I'm going to say this because this is kind of funny. I did read in the Wall Street Journal, there is a romance recession where American women are giving up on marriage and staying single. Now, I didn't know that, but when you think about that, and this could be for further discussions regarding birth rates and how much you need for taxes to provide for government services. So I'm sure Catherine will be talking about that going forward.
It was funny, earlier, Rich and I do a Savvy series, and we just did a podcast on divorce.
Okay, but anyway, I saw that and I started chuckling when I saw that, and I thought, oh my goodness. Okay, but that's a discussion for a later date. But I do want to close on one thing. This is a very happy day for me because it's opening day of Major League Baseball.
Yeah.
Go Giants, go Padres.
Oh my goodness, yes, opening day. So just to kind of recap some of the things you mentioned, Vince, on investing. So obviously the growth stocks are a little undervalued right now. Value stocks are a little more in favor. But when we look at an asset allocation for our clients and being diversified in a plan, we will most likely have a mix of both the different types of investment strategies. And so currently we do have some clients in more value-oriented dividend kind of paying stocks, which has held up very strong with this market. But once again, it fluctuates. Last year growth was more in favor, even though value stocks did well, but they didn't do as well as growth. So, for us, when we look at helping our clients in designing investment allocations and making sure the plans work, we do look at different sectors along the way. But obviously there are things that fall in and out of favor, and we look at individual stocks. But I just want to make that point.
Yeah, that's why you stay diversified, and because you never know when they're going to turn. Yeah.
Another indication for rates is for the next cut. It looks like potentially there is an 85% chance of a pause at the next May meeting, which is kind of interesting that they're looking forward thinking. So I don't really think I will see rates change probably over the next few months. I'm kind of thinking we'll stay where we're at with interest rates is what it's looking like.
Well, they really don't need to cut. They've been going down they've been going down.
They went down and then they
weekly.
stayed flat.
Yeah.
So it's just, I think at this point I don't have any major changes there. So I thought I'd have the conversation a little bit today about Social Security. So we've had several calls this year in particular, but in the past we do have this conversation about Social Security and when should I take Social Security. And Social Security is something that, depending on when you retire or if you're still working, there's a lot of variables that are considered, as well as if there's a way to maximize your benefit. We also look at, is there any health considerations? And so it is kind of case by case, but there are ways to maximize. But recently there's been a lot of conversation of, is it going to go away? Is it going to be reduced? I mean, there are definitely some discussions and there could be some changes. But I did find an article from Think Advisor. It basically talked about Americans' lack of key Social Security knowledge. And one of the things that it says is many believe that benefits start automatically at retirement, at full retirement age, which is not the case. It doesn't start automatically. And I actually had a client last year that we were working with, and they thought that they had to retire first from work before they could turn on their benefits. And so I think there is some misconception about Social Security. And then we also have some clients that potentially, if they're not working and they may want to take it early, does that make sense? So you can run some analysis to see, does it make sense for them to start taking it a little early? But then there's tax considerations and
some people
limits.
don't realize that Social Security is taxed to the IRS. And fun fact, there are 9 states that tax Social Security, and therefore there are 41 states that do not tax your Social Security. But I thought that was interesting.
And California does or does
California
not?
does not tax Social Security benefits. So
Now they tax everything else.
So,
I'll take that.
so I guess bottom line is, we are here as a resource. Actually, I just talked to a client yesterday and just told her to send me your Social Security statement. Let me take a look at that for you. So that is something we can help you with if you have questions or want us to look at that for you. But it was interesting. Another topic that came up recently over the last few weeks now with the Social Security is that they're requiring in-person appointments. And so that's something that's a change. It looks like that's happening. Do you want to share your...
Oh, yes. So I think we talked about this on a podcast earlier in the year about the Social Security Fairness Act, where teachers, police officers, firefighters, et cetera, who previously did not qualify for Social Security benefits because they had another pension, now are able to receive a Social Security benefit in addition to that. And I mean, this is an actual true fact. My a family member called the Social Security Administration and is now was a teacher and now a retired teacher, and now she's actually, her Social Security benefit doubled. Wow. But that's not the story. The story was that another client had called and asked about that because of the podcast, and she finally got up the nerve to go to the Social Security Administration to apply for this, and they said, well, you can't come in. So they're not taking in-person appointments anymore. And they said, well, you have to call. You have to call and make an appointment, or you have to go online. And she said, I don't understand how to do that. I don't know how to use my computer.
So they want you to do an appointment in person, but you can't go in person to schedule it.
Correct.
They wanted you to...
Yeah, they wanted her to go online or call in to make an appointment to go in person.
Yeah.
So I thought that was really interesting. But then I think she started crying, and the guy took pity on her and was like, okay, fine, come in. We'll make the appointment at the counter, and then you can come back.
Wow.
Because she was like, I don't know how to do it online. I mean, she was an elderly lady and, didn't know how to use her computer and just wanted to go in and see if she could increase her benefit.
So these individuals that have that opportunity to start getting Social Security, they do have to go in person?
They actually have to apply for it. It's not automatic. Necessarily.
But the article says beginning March 31st, people will be no longer to verify identity over the phone. So,
okay.
Yeah, I don't know. So it sounds like they're going to be required to do in person to complete the verification process.
Wow.
Yeah.
So I don't know exactly, if that's right around the corner. I mean,
Yeah.
March 31st, if that's true. But that's something that I think, it's definitely a change.
Interesting.
I guess I'll have to go in.
There you go.
Not that I'm taking Social
To
Security.
make an appointment first.
I'll go online.
Well, do you have another pension? Like a government pension?
No.
Well, then I don't think that's what...
Oh, you don't have to go in if you...
You
I
don't-
thought
yeah,
anybody,
No.
you have to have a government pension to go in.
That you were collecting that instead of Social Security.
So for instance, let's just say that you were a firefighter.
Oh, okay, I understand.
and you were
Okay, I got you
retired,
now.
right?
Okay.
But you'd had jobs in college or something and had paid into Social Security before you became a firefighter, and then this whole time not able to collect the Social Security. Now they're turning around and saying, well, that's not fair. If you actually paid into the system, you should be able to collect both.
Yeah.
But the point I was making was that there was recent news that the Social Security Administration going forward is going to ask for verification in person
That's what I
versus.
was- that's what I
But
was
that's
asking.
only if you were going to turn your benefit on.
That's what I was
Oh,
asking.
for anybody
that's what I was
turning it
asking.
on.
That's
Yeah.
what I thought.
Oh, wow.
Yeah. So
Yeah.
that
Okay, I
was,
misunderstood
You're
that.
right.
okay.
Wow.
Not that I'm ready to do it, but
There you go. Okay, so if you have any questions or if you need our help with your investments or Social Security, please give us a call. And we appreciate you joining us today. And until next week, we'll see you then.
Thanks.
thank you. Go Giants. Go Padres.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.